All right, and we are live. Hi, everyone. Of Trading Bitcoin with your host, Tone Vays. Apologize for being a little bit late, but as usual, a lot going on. Let's go straight to screen share. So right after hit the live button, realize I'm wearing a Cointelegraph sweatshirt. It's a really cool sweatshirt. Thank you for giving it to me, guys. Oh, wait, why is my camera out of focus? That better? A little bit better. Perfect. Cool sweatshirt. Thank you for the hookup in, where was that? Singapore. All right. And though I'll show a little love back. Press release, Unconfiscatable in Cointelegraph. One day we'll be able to afford banner ads, but just starting out. So boom, wearing a Cointelegraph t-shirt, sweatshirt. Thank you guys. We do have media partners on Unconfiscatable website. If you go to the bottom, am I streaming? Everything's good, right? Internet connection is a little slow. Should be good. We do have media partners, guys, and we do have sponsors. There is a button here if you want to, if you're considering being a sponsor for Unconfiscatable. There's a button somewhere on here to reach out about being a sponsor. I'm sure you guys are resourceful. You'll find it. Financial Summit is also on sale. Let's go to the charts. Oh boy. Oh boy. There we go. Charts. Showed up. All right, weekly chart. Oh, I took out my annotations. Boom. Not good. Not good. This was the big line. This was the big line in the sand. We smashed the line, got rejected by the next level of Fibonacci's at 8,500, and we're now back below that line. We really need to close above it. If we don't close above it, it puts Bitcoin in a very iffy position. It's still not bad. If we can close above the moving average, if we can close above 7,700, you know, there is something there. But if we can't close above 7,700 by Sunday night, that's really bad. That's very weak. That's very bearish. I mean, you need strength to build on top of strength. If we could have closed above 8,500, that's a whole new world. But if this weekly chart continues to pull back, that's really, really, really not good. Okay, let's look at the daily chart. As you guys know, I like sequential. Did I want to see these giant rises? Not really. In a perfect world, this would have got to 8,500 a lot slower. It would have taken 9 days to get there instead of 6 days to get there, giving you the perfect, exit opportunity to either get out or even go short at 8,500 on a 9 at a moving average rejection. But things aren't perfect. So what I was looking at is the moment you break 7,700, it's a like clean sailing to 8,300. I talked about it in prior videos. We went up a little bit higher than that, went all the way to 85. But now, if this thing price flips, if we get a red 1, followed by a red 2 going below red 1, going below 7,700 by Sunday, that's a problem. That takes this arrow, sticks it literally right here. If we close below this line and then start trading below it, that opens the door for this. And once that happens, you break 7,200 again. And I don't want to like move. The charts get too cluttered, but I also don't want to use like revisionist history like someone goes to a future video and says, wait a minute, Tone moved this arrow out of the way, he was wrong. I mean, I don't want to delete the arrows, but eventually the chart gets cluttered and I do delete them. But if we start going below 7,700 again, and especially below 7,200, like this shit is not going to go away. And the next time, the next time we fall, this is still in jeopardy. I still think 6,500 is gonna get knocked out to the downside. But this will be the final push. It'll be the final push, and then we can start going higher. Okay. Very quick, I put up a blog post. Haven't blogged in forever. Also, hey, for the affiliate page, I added one more this morning. I had a chat with the 3 comma guys. They seem to be doing really good things. I got to bring them on the channel and do an interview with them. Took a look at their platform real quick. Set up an account, did an affiliate link, mine as well. Hey guys, if you were thinking about using 3 commas, I have the affiliate link. I'm gonna set up an interview with like the CEO, and so we can like discuss it, see what they've done, and see why people do like the product. So that's the new one added to the list. If you want to support this YouTube channel, please check that out. I want to start vlogging again. I wrote my blog post. I know it was about 10 days late. I meant to get this out before the year started because all the publications were messaging me, asking me for my outlook. So here it is, my 5 most, my 5 biggest trends of 2019 and my 5 most critical trends for next year, okay? So right here. So this is, so it's 5 and 5. 5 from 2019 and 5 looking into 2020, including my price outlook for 2020. Go ahead and check that out. The last time I put up a blog post, which was just, me putting up a video and giving it a description, was over 2 years ago. My next blog post will probably be about the Tone Vays diet for 2020. I'll try to write that up on the plane. Speaking of which, I'm flying out to New Zealand, and then I'm flying out to Australia. I got a bunch of meetups there. Got to promote them. Check my Twitter. All right. The stock market is at a new all-time high, but I want to take a look at lower level time frames. This is the 12-hour chart. You can say all you want, oh, we broke the trend line, but we really didn't. We didn't really break the trend line. We're back inside the channel. A trend line break is not supposed to go back into the channel. So it looks like it's over. It looks like this was a dead cat bounce. I think the 4-hour chart did a really good job. This is the 15-minute chart. Oh boy, the 15-minute chart really dropped it half an hour ago. Oh wow, look, the 15-minute chart tops on a 9. Someone in the comment section said, who on earth uses a 15-minute chart? Well, a day trader does. When I was a day trader in the futures market with S&P 500, gold and oil and silver, I used the 10-minute chart, especially the S&P 500. And tops on a 9, 15-minute. I do like the 15-minute chart. It was Joe Saz that pointed out the usefulness of sequential on, look at this beautiful 9 right there. The usefulness of sequential on a 15-minute chart. And that was a 9 right there, and then whoop, down we go. But the 4-hour chart did a good job too. Someone pointed that out to me. And there it is. There's a 9 on a 4-hour chart, and we're about to get a 9. So you're about to have a little bit of a bounce here. So maybe we're not ready to fall straight down yet. A 4-hour 9 is coming, but I do think this is over. I thought that this bounce could go as high as 8,300 before starting its trend down. There is good news, however. Here's the good news. If we can stay above 7,700, if we can stay above 7,700, and then go higher than 8,500, I might be bullish the rest of the year. I just don't think it's going to happen. I just don't. There is a difference between me thinking it's going to happen or maybe kind of like the charts will make me a bull. I just don't think the thing that the charts have to do to make me a bull is going to happen. If the charts prove me wrong and it happens, I'll be a bull. Okay. I just don't think we're going to swing up above 8,500. This is going to be a dangerous statement. Look, anything can happen. I'm going to say with an 80% probability, I don't think we're going to go above 8,500 before the halving. I think that was it. Just like when this happened, when we moved up to over 10,000 right here back in October. So we got October, November, December, January. So 4 months, right? 4 months ago, when we moved to 10,000, we're not even close to 10,000. Well, I guess 8,500 could be considered close, but look at the chart. I think the thing that happened here, the rejection of the 128-day moving average, is about to repeat. And what happened the last time we got rejected at 128? We went and made new lows. How much did we fall? By percentage. I'll even cherry pick the ultimate high, and I'll cherry pick the ultimate, the swing low. We fell 37% from the swing high. So if I take this and I just slide it over and make it 37%, what are we looking at? So if I take this and I put it here, right? So here's your 37%. You know, I don't know how long it'll take, but you can see where the price is. The price is at 5,300. Do I think this will happen with 100% certainty? No. 90% certainty? No. 80? No. But do I think this will happen with a 55 to a 60% certainty? Yeah, probably. I'm definitely thinking that this is more likely than the other way around. I think that it's more likely that we fall 37% from the 85 high before the halving. I think it's more likely that we fall 37% before we go up 37%. Maybe not 37%. Let me not be that bearish, right? But I think it's more likely that we fall, let's say, 30% down to 6,000. I think that's more likely than going up 30% above the prior swing high of 10,200. I just think the bearish scenario is more likely. If we can get above that $9,000 mark, then obviously the rise is more likely. But right now, I still think the fall is more likely. All right. I don't really want to look at shitcoins right now. They don't look good. Please read the blog post. I talk about shitcoins quite a bit in there. Really cool graphics. Thank you, Willy Woo, for having this. I didn't even realize that BitMax started using SegWit, and look, it immediately jumped. The SegWit transactions immediately went from 40% to 55%. And I think almost all of that had to do with BitMax, right? If only blockchain.info would start using SegWit, which they said they were ready for in January of 2017. And it's in my blog. Oh, watch. Boom. Right there. Just click on this link. This is why I got to start writing again. Look, it's evidence. It's evidence in the Twitter blockchain. CEO of blockchain.info. Before the hostile core replies come, yes, I support SegWit. Yes, we are ready for it. And yes, I've encouraged others. This was published in January of 2017, before he decided to go full 2x. Okay? Before he decided to go full 2x. All right? SegWit 2x. and still no SegWit. It's been 3 years. What? We're January 2020. 3 years. 3 years. Yes, we are ready for it. It being SegWit. 3 years later, still no SegWit. Okay? And that is why we are sitting at only 60% and not, say, 65 or 70. You add BitPay to that list, that takes us all the way to 80. Probably. All right? And this is why the Bitcoin transactions are cheap and Bitcoin transactions are fast. Well, read the blog. It's pretty good. I think it's good. It only took me 2 days to write it, so I think it's pretty good. I'm terrible at writing, guys. Absolutely terrible. All right. What is this? Oh, the Ripple shitcoin. Oh, God, I can't wait for this to go to 0. All right. Ethereum, not doing good. They're all doing terrible. Terrible. Gold. Well, stock market goes to new all-time high. Hey, Trump might have gotten himself reelected again. Look, if Trump goes to war, I won't vote for him. Okay? I'm not apologetic. I voted for Trump. I have no problem with that. I vote for him again. But if he starts a war, I'm not going to vote for him because I don't give a shit that a wartime president has never won. Like this is why we have a vote, right? Yes, I voted for him and won. And if he solves this shit peacefully, I'll vote for him again. If he doesn't, I'm not going to vote for him. It's that simple. Oil didn't really spike that much. I'm sure silver is down. S&P, new all-time high. New all-time high. What am I going to say? What am I going to say? We all should have our retirement funds in the S&P 500. Not financial advice, but yeah. Markets are a new all-time high. Look at Apple. Oh, it's really important for me to go and take a look at Roku. I actually don't want Roku to go up much. And the reason is because, oh, this is gorgeous. Gorgeous. Because in the options webinar, we put a trade on Roku. Well, I wanted to start going up soon because this trade is profitable no matter where it is between the purple lines. But the closer it is to one of the purple lines, the more profitable the trade is. But if you're sitting right in between, going into option expiration, it's a no, it's, man, that was a good trade. I should have traded it myself instead of just teaching it. Tesla. Still looks good. Wow, look at Tesla the last few days. Oh my God, it hit $500? God damn. I can't believe this thing was 180 just less than a year ago. My God. Itching to trade again, guys. I really am. All right. Let's take a look at some of your questions. Hey, I finally got a subscribe button on my YouTube. Guys, subscribe. I don't usually ask to subscribe. Boom, you have a button now. It's great. Bottom right-hand corner. Slowly doing a little work. Hey, Tone, Tyler Jenks, exponential moving SAR, right, the Lucid SAR on TradingView, just turned bullish on the weekly chart. First time since 19th of July. It's been performing really good. Your thoughts? Good question. Let's go take a look. Weekly chart. Let's turn on the SARs. Let's go take a look. The Lucid SAR. Lucid SAR. Boom. Yes. So here's the thing. Here's the thing. I'm not a SAR expert. I'm not. But I will point out my potential problem with acting upon a trade using SARs is the same potential problem I have with certain elements of sequential. I want to, if I'm going to act on a trade using SARs, I want it to happen more like this. You see how I have a very slow advance into the SAR, and the break of the SAR is occurring on a neutral candle, not a crazy spike. Now, unfortunately for me, while this break of the SAR would be a good time for me to enter the bullish trade, the sequential system was at the end of the count. And that kind of sort of, even though if you go back to these videos, I was saying if we break 4,200, we're going to fly to 5,200. It actually happened faster than even I anticipated. I don't like to enter my trades to the upside here at the top of the candle. So I'm not going to act on a SAR trade if this is the moment the SAR breaks. This is where I would want to act on a bullish trade with a SAR. And the reason I'm talking about this is this. You see how we broke the SAR right here to the upside, creating a bullish trade. But in order to break this SAR, the price of Bitcoin literally went up 40% in 3 candles. Let's ignore the fact that they're weekly candles. And that is a big problem for me, okay? If I go back 5 candles, it was up almost 50%. That's the big problem. That's not how I want to see a SAR broken. If we go over here to the all-time high, and we look, at least when this SAR broke, there was consolidation. I want to see a SAR break with consolidation in order to act upon the SAR trade. And I'm not a SAR expert. This is my 20 minutes of thinking and experience of general trading concepts and risk reward, right? I don't want to see a SAR broken at a point where I think the trend is being exhausted. I want to see a SAR break in the beginning of a potential trend. And same thing here, right? Like if it happens on the downside as well. I hope I didn't move anything just now. It happens on a downside too. Like right here, we broke the SAR to the upside, and then within 3 candles, we broke the SAR to the downside. Now, for the same reason, I don't want to take the long trade here. I don't really want to take the short trade here, even though I have other reasons to take the short trade, and those reasons being the fact that the descending triangle might break. But also, if you go back to these videos, I'm almost certain I was not very confident in the immediate break of the triangle because it would have been too soon. And we have just fallen, how much? We just fell 30% in 3 candles. And again, that feels like the crash is already exhausted. So the break of this SAR is not the time to take the short trade, okay? I would rather take my short trade here, which is exactly when I took the short trade. I took the short trade in early October. The Tether law case screwed me up a little bit, but I was still sticking with my short trade, which eventually did work out. And that is my criticism. Like if the top of this candle broke this SAR, it's not like I don't want to enter my long trade right here. So this is my same concern. Maybe if you entered, I don't remember where the SAR was. So maybe the SAR was like where it feels like the SAR would have been approximately where the current price is. So if I'm taking the long trade, the moment the SAR is being broken, which would have been probably lower than the current price of Bitcoin, I am still sitting in a long trade. But if this thing is closing the candle at a loss, I would probably get out of this trade. I'd rather re-enter it at a similar price next week or the week after. My concern is that this candle is not gonna is gonna still send us down. And if we had another candle or two of consolidation, look how fast these SARs are falling, right? And the next SAR, if we didn't break the SAR on the current candle, and we were breaking the SAR on the next candle, and that would have been closer to 7,500, that would have been a very interesting trade based only on SARs. So I do want to see the SARs being broken in a slightly more out of consolidation, just like out of a triangle. So it was a long-winded explanation, but thank you for making me look at it. We can also take a look at the SARs on the daily time frame. Let me get rid of this before people think that I'm actually bullish. I am not. I will be eventually, but not yet. All right. Oh, and I got another question. Let me read it before I lose it. Thank you, guys. We have 900 viewers here. And there was other like tips. I don't know where they went though. Okay. Hey, Tone, have you heard of, I don't want to name any names, guys. And if so, what do you think of his statement that 90% of retail traders lose money and that most trading platforms automatically take the opposite position of your trades? I don't know who that person is. I've never heard of him. 90% of retail traders lose money. That is absolutely true. I believe in that. Most trading platforms automatically take the opposite position of your trades. That I don't believe, because trading platforms, right? Like most trading platforms just connect buyers and sellers. Like when you buy Apple stock, do you think Interactive Brokers takes the opposite position of you? Of course not. Their job is to match you with another trader, right? So no, that's not true at all. Go to a casino, right? Like at a casino, you can play blackjack against the dealer, but you play poker against other players. When you play poker at a casino, the casino takes a cut. The casino doesn't play poker against you. And when it, well, it could on a poker machine or whatever, right? So when you play poker against the casino always takes the opposite bet, because the odds are in the casino's favor. So why do we have professional blackjack players, right? If the odds of blackjack favor the casino, why are there professional blackjack players? It's the same thing. Do 90% of traders, retail traders, lose money? Yes. But also remember this, 90% of retail traders don't learn how to trade. They just trade, right? What would happen to 90% of drivers on the road if they never learned how to drive a car? What is the probability of them getting into a car accident and getting killed if no one taught you how to drive a car? There's a reason why you go to an instructor and learn how to drive a car. And 90% of people do that, which is why 90% of people don't really get into car accidents that often. I've been driving for, let me not give away my age, I've been driving for a good 20 years. Been in 2 car accidents. Is that a lot? Is that a little? I don't know, right? But like 1 accident every 10 years, not, you know, on one of them I got hurt. Was it 2 or was it 1? Hold on. Yeah, 2 accidents. On one of them I got hurt, and the other one I didn't get hurt, right? So 2 accidents, and 1 time I got hurt, right? That's in 20 years of driving. A lot. Like I've driven a lot. I used to, you know, drive New York to Florida because I went to university in Florida. Like I've driven a lot. I've driven over 100,000 miles in my life, probably way more. So yeah, it's a lot. And so same concept, right? How come you go to a driving instructor before you get behind a wheel, but you don't want to learn how to trade before you start trading? So look, you're only going to trade as good as you're disciplined to trade and you learned how to trade. Next, Apple on weekly. Yeah, I'm pretty sure Apple's in a hyperwave. I think it's been discussed in the hyperwave channel. Oh yeah, what was I talking? Oh, I was gonna look at SARS on the daily chart. Should be in my favorites, no? Parabolic SAR, that's not what I want. I want lucid SAR. Not in there. Interesting. I can't make it a favorite for some reason. I don't know why. Let's look at lucid SARs. Yeah, see, look at the daily chart. SARS on a daily chart would have gotten you into some bad trades. Like, see, this is what I don't like. Like going long right after a huge candle to the upside that was preceded by a huge candle to the upside a little bit earlier. And look how you broke the SAR to the downside. You did it on a huge candle that could potentially signal exhaustion. All right. I would be more interested in going long on over here, even though I would admit that this trade would have been, catastrophic. Not catastrophic, but this would have been a losing trade. But at least I would have taken this losing trade. Like in hindsight, I would not. In hindsight, I would not go long on this candle. So I would have saved money on this, even though if I held the trade long enough, I would have been in profit. But how long am I going to hold this trade? That is a pretty big stop loss. I mean, if I'm entering this trade at the break of the SAR at 7,500 and I'm watching my position go to 6,800, maybe I'm still in the long trade. Maybe I'm, taking the stop loss right at the bottom. Maybe I would have held in there, right? But I'm just saying, I don't like the long here. I like the long here more, even though this would have been a disaster that would have gotten me into potentially, but for the same reason, I don't want to get into a long here. I would not get into a short here. This is not where I would short at an all new low, an exhaustion. The time to short was earlier. Sequential would have had me shorting over here. Way better, right? So the sequential is telling me to short. A couple of days after SARS are telling me to go long. That's very contradictory. I want them to be in line. I want to break the SAR like this. You see how right here, this 3 candle is telling you to go short based on sequential, and I'm breaking a moving average. If this candle right at this line would also be breaking the SAR to the downside, I am very interested in this short trade. In fact, even over here, even though the sequential is telling me I'm late to the party, the SAR has consolidated for a while and then it's being broken. This is where I'm interested in entering the SAR trade. This is where I am not interested in entering the SAR trade. Let's assume the SAR got broken at 8,300. I don't want to take this trade because we just moved from 73 to 78 in like a day. Okay, so I need this to be, I need the SAR to break in a more orderly fashion. I don't want to take the trade off the SAR, and I'll wait. If the SAR gives me 1 trade a year, 2 trades a year, I'll take it, right? I'll just put more money into that trade because I'm more confident in that trade. Very long and winded discussion. Hope it helps. Yeah, I'm 90% sure Apple's in a hyperwave. I don't have time to draw the hyperwave now. I'm sure it's been discussed. Probably a better question for Socrates on his channel. Yeah, Apple is totally in a hyperwave, right? But I need to be linearly, I need to do this linearly and not logarithmic. Yeah, it's obviously in a hyperwave. If I go linear, this looks linear, actually. I think I am linear. Oh, yeah, I am linear. Perfect. Yeah, that's phase 1. This is phase 2. This is phase 3. And we are probably in a phase 4 right now. But it needs to end soon. I don't understand why Apple is worth so much. I hate their product. I absolutely hate them. I don't understand why it's at a new all-time high. All right, guys. Maybe I'll take a look at a couple of other things. Once again, hey, check out my blog post. Check out my 2020 crypto outlook on tonevays.com/blogs. Also, if you want to support, please check out the affiliate section. I added one more this morning, 3 commas. I'm going to try to do an interview with them soon. I had a little private chat with them, checked out their platform, decided to create an account. I'll be trading next year. So I figured might as well get all these accounts set up. Might as well do an affiliate code if you guys are thinking about using them or anything else. Trading is risky, but here you go. Use these links. You can support. Please subscribe to the channel if you're not subscribed, but I'm assuming you are. That's about it. Unconfiscatable is on sale. So is the Financial Summit. Lots of cool things coming. Check it out. We'll probably add 1 or 2 more speakers that are maybes still, but then that's it. All right. Bitcoin. Let's go glance at the Bitcoin price one more time, see if it's moving. We are on an 8 with a 4-hour. I'm not going to be here for the next 2 hours with you. So a 9's coming. That could help bounce the market for a little bit. Oh, people are asking who's Socrates. Well, Unconfiscatable. He's teaching a workshop as well. He's been on my channel before. So Socrates Streams YouTube channel. You can check out if I click on this. Let's see where it takes me. You know, he was with Lucid. He was with Tyler Jenks and Detail. This is his workshop at Unconfiscatable. Happens the day after my workshop at Unconfiscatable. He has a website. He has a YouTube as well. He knows SARS better than I do. But I mean, I would pay attention to it. What are his credentials? Ask him. I mean, like, why are you asking me? Guys. Love to see a new law show. Yeah, me too. I've been trying to put a law show together, but sorry, guys. Conference organization is just chewing up all my time. We got 3 conferences right now to organize. Financial Summit, Unconfiscatable, and Understanding Bitcoin. That one is coming back as well. If you go to conferences, go to Understanding BTC. The registration is not open yet. It should be opening soon, but check that out. Coffee. Somebody wants me to take a look at coffee? Let's take a look at LK. Yeah, another great event on Understanding Bitcoin. All right, I'll take a look at coffee. What do we got? LK? Is that? Oh, that's a coffee company, not the futures. I would rather trade coffee futures, not a coffee company. I've never even heard of Luckin Coffee. ADS, this is not an American company, is it? Where are they from? Yes, I see the 9. Is it an American? It might be an American company. I'm not sure. I've never heard of it, but this is the weekly chart. It's on a weekly 9. So I would be taking my profit from this. Looks like they IPO'd recently. They never fell 50%, or did they? Let me go to the daily chart. Good thing I saw the weekly. Oh, look at that. Look at that beautiful 913 right at the high. 1 to 4 candle correction, bounces off a moving average and starts to rise. Look, the daily is bullish, but it's conflicting with the weekly chart. Those are two very good days. I would maybe stay in this stock if I had it. I would maybe stay in it another day or two, but I would start to take some profit, guys. Let me go to the opening. So the stock starts trading, and it's down 47%. Again, the Tone Vays IPO rule. If your stock is down 50% after an IPO, it's in consideration for a buying opportunity. 47%, close enough for me, okay? So the stock did exactly as it's expected off the IPO. It fell 50%. The only stock in recent history, oh, not the only one, Zoom didn't either. Uber did not do this, but Uber lowballed their IPO. You're supposed to know that. When Lyft got nailed off their IPO, people were so pissed that Uber opened at like $28 or whatever instead of $58. So Uber already opened at like a 40% lower than they were initially planning. So Uber was not expected to go down 50% because they lowballed the IPO price. I would think about getting out soon because of the weekly 9. I would have gotten out on a daily 9, anticipating the weekly 9, and I probably would not have gotten back in. So I would have been out of this thing at $40. And right now, I would be maybe a little bit pissed, but I would also respect the 9 on the weekly and say, you know what? I'll wait for a real pullback. I will wait for a pullback on a weekly scale down to $30. And if I still believe in this company and the technicals line up, I'll buy it again. But I would have said, I made my money. I have no idea this company exists. I'm looking at it for the first time. I would have said, hey, I would have either bought off the 50% drop off the IPO, or I would have potentially bought on a breakout above prior swing high, had a nice weekly 2 going above a weekly 1 on a daily scale. That coincided with a 9 and 13 buys. Here's a nice 2 going above a 1 right there as well. So lots of reasons to buy it right here, along with the weekly chart. And I would have already been fully out off of this 9. Might have even taken a little profit on that 9, but the weekly chart had, open air and blue skies. But this 913, I would have been totally out. And now I would just probably be sitting and watching. If you're still holding this, I recommend start considering some profit taking soon. Though maybe I shouldn't recommend anything. Use your own judgment. All right, guys. Looking at the live chat. All right, cool. All right, hey, thank you so much for watching. Again, thank you for the support. Check out my blog. It's up there somewhere. Check out the affiliates, and please come and support for the conferences, Unconfiscatable and the Financial Summit. Thank you for watching, guys. Ooh, there I am. Thank you for watching, and I will see you all on the next one and see some of you at the conference. Bye, guys.